Maverick traders. Welcome out to your market roundup, March 13th. March Madness has begun. Corey here with you, and let's get to it. So we always look at the markets from a top-down approach and look at what meaningful news is out there, how sectors are rotating, where capital's going, where it's coming out of, and then that ultimately leads us to our best bullish, bearish, or neutral ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we look at today in the markets, it's kind of interesting because you look at the Dow, the S&P, and the NASDAQ, they're all higher. The Russell, though, the small caps, were down about 0.5%, and we'll see this in the advanced decline line. It was 50-50. Half of stocks going up, half of them going down. So why does the S&P and the NASDAQ show that profitability? It's just that the biggest names were better today. But really, what's been trending has been oil and energy of late, and they're outperforming of late. I still think that's the bullish area to focus. Daily news, Apple and Google to partner on AI, talking about bringing Google's AI to Apple phones and so forth. That's going to be an interesting partnership if it transpires. Semiconductors, which have led the entire way up, gapped higher after kind of a rough week last week, selling off most days last week, gapped higher and then ultimately failed and finished on the lows. So if they can't lead us higher, I'm a little worried about this broader market setup. Advanced decline line, like I said, half of stocks going up, half going down, and the 50-period moving average has gotten weaker. There's still 60% of stocks above the 50 MA, but it was a higher percentage than that last week, and we've started to roll over a bit. So I've been on record of late as saying I don't love the markets here. I'm not ready to aggressively short, but I've gone neutral, and that's really what we're trading, is a sideways neutral pattern. Now, give credit where credit's due. Generally speaking, a sideways pattern within an uptrend leads to upside breakouts. But I don't know if it's going to happen this time. I mean, today's price action, you gap up and then you sell off and kind of finish on the lows of the day. You can see shooting that spinning top or shooting star-like candle, a little bit more bearish than bullish. And I suspect we may be seeing the beginning of a correction. Now, the NASDAQ's already been in that. We were below the 20 as of last week, kind of popped above it today, but see how we finished on the lows. And again, long upper shadow. I still think there's a little more selling pressure to come. Obviously, Wednesday with the FOMC meeting is the big wild card that could push stocks one way or the other. I'm leaning that it's likely to be to the downside, but I'm positioned more towards a neutral state. Now, if we look at the heat map, like I said, big name companies, Google came sharply higher on the news of a potential partnership with Apple. Meta bounced back. Tesla, which has been beaten down, bounced back as well. Energy a little bit more in the green over here. Some other names, Pepsi higher, Abbott Labs lower. It was a mixed picture, and again, about half and half. But the more important stocks, the bigger market cap stocks, seem to go higher. So I've taken down my outlook. This is where I feel like the technicals, it's not just the 20 and the 50 and the 200 and things like that for me. I also look at some other factors that can kind of offset those, like bearish divergences, like some other things where I can use some discretion and so forth. So for my personal rating, I'm more at a 0 right here. Now let's highlight some bulls and some bears. On the bullish side, I've got a gold miner, I've got an energy stock, and I've got a real estate stock. On the bearish side, we got a mixed picture. We got a retail stock, we got an industrial, we got a healthcare. It's a mixed bag, but I've been holding off on highlighting the gold mining stocks. I've talked about gold and silver, but held off on the gold miners until now. This is GFI. It's a gold mining stock, and I was waiting for a pullback. We saw a big surge out of the sector waiting for a pullback because these gold mining stocks have vastly underperformed the metal. But I think this is starting to be the area where it's worth a look. And GFI is an example. You've got sort of a cup and handily type of pattern or ascending triangle, but ultimately I expect we're pushing back up towards that $16 price point and maybe even above that. But it gives you some upside target and some upside potential here on this deeper pullback. Oxy is not in a pullback, but this has been one that I've talked about a few times in the energy space as bullish candidates. Here we recently consolidated and broke out. I would just use little dips as buying opportunities, and I'm talking 1 day, 2 day dips for opportunities to buy in and still proceed to the upside in Oxy. On the bearish side, I highlighted Biogen last week up here, but now I think we're more on the cusp of a breakdown of this support level down here. So notice the support zone down at the bottom, and we're on the cusp of a break lower. Again, I want to be a little bit conservative on my downside targets because we're not in a bearish market yet. So I still wouldn't be super aggressive in terms of how far I position for this to go down. I mean, I'm talking 10 points lower, something like that, which for this type of name is not that big a deal. We've already dropped from where we highlighted last week. We've already gone down 10. I think there's another 10. You can make money on that type of spread, but I wouldn't be targeting, some big percentage drop. But Biogen, a candidate for more selling. Now, if we look at where the markets are at, I think we're in kind of a blow off top phase, a little bit of a precursor to a correction. We'll see if it materializes. This little consolidation should start to give way and start to correct if I'm right in the short term. The Fed meeting comes out on Wednesday. I have been on record saying I don't think the Fed is going to aggressively cut rates like the market has anticipated, and they've already removed some rate cut expectations. I wonder if there's more to come. And actually, when the Fed finally does relent and cut rates, it's a bad sign for the economy and for stocks because they're reacting to something. FedEx, General Mills, Lululemon, Micron, Nike, there's still companies reporting. I had Lulu on the more bearish side. If you're trading earnings, Lulu and Nike and some of these look like more bearish charts than bullish, no doubt. Hope you enjoyed the market roundup. Have a great week ahead. We'll see you next time.